We have to talk about Tesla and Elon Musk. And I know you just had a conversation on Twitter X. This has been, I think, from day one, right? In terms of you starting out, that you've had this investment in Tesla. And I remember when we first talked and you were getting started, you talked about him being the next Thomas Edison and how his vehicles would turn the U.S. economy upside down. Having said that, there's an evolution and the EV world has changed. How are you thinking? It's still a top holding. How are you thinking about the Tesla story right now?
Well, first of all, Carol, thank you very much for letting me interview that time. That was nearly 10 years ago. ARC is about to celebrate its 10th year anniversary, and you gave us that opportunity, so thank you. The world is evolving, actually, I think, even more closely to what we expected. Because we expected a lot of traditional auto manufacturers to see the writing on the wall and rush as quickly as they could into scaling big time into electric vehicles. And what has happened recently? Both GM and Ford have said, we're stepping back. We're not going to do this until it's profitable. The problem with that is, in order to be profitable, they need to scale. That's how this works. These are learning curves that they are riding down, and those are expressed in cost decline. So the fact that they're pulling back means there's more share for Tesla and others who choose to go for it.
And Cathie, I want to keep the
Elon, you have been great at, I think, standing up to short-term oriented shareholders. That's one of the scores in our scoring system as we're evaluating companies. Is this a visionary management? And will they stand up to short-term shareholders who want their profits now, their dividends, their share repurchases? Will they invest aggressively enough in the future? And I think you've done a great job.
Well, thank you. And credit to the Tesla team as well. So, but that said, at Tesla, we do go to great lengths to ensure that our quarter is good, that we don't disappoint. Because it's not so much about it's just that we feel like we have a sort of moral obligation to, to not have a bad quarter and disappoint people. So the number of New Year's Eves that I've spent in delivery centers is like, 6, 7, I've lost count how many times I was delivering cars until like basically midnight on New Year's Eve personally.
Has it done let me just ask the question the other way. At SpaceX, you feel like you have more degrees of freedom. Being public, has it done anything positive for you, for Tesla?
It did allow us to clean up our capital structure, which was overly complex as a private company, and have a single class of common. So we were really things were getting quite unwieldy with the private company capital structure. There was obviously the capital availability in the public markets, which is a lot more than in private markets. And a car company is capital intensive. So I guess access to large amounts of capital and cleaning up what had become an extremely complex private company share structure were two major things. Certainly, it was also good to give access to the company stock to small shareholders. So those are good things. But I think it's also been a tremendous distraction as well on the downside. And there's just a lot of overheads. There's more time that's required to manage a public company than a private company.
So Tesla has led the EV industry for years and will have to keep outselling its peers while maintaining its high margins in order to stay ahead of other electric car companies. No doubt the EV market is getting tougher, but for Tesla bulls and investors, there's no reason to panic. In fact, Cathie Wood just reassured investors that Tesla will remain a profitable car company.
Like all the companies across all the years, I've never lost money for an investor even once. And this is now over 100 financing rounds. Now, of course, I cannot stop people from selling when they should not sell, but I have never driven them to a bad outcome. So that's pretty good. And obviously, when you've treated capital well, then capital it treats you well in turn. And so it's basically very easy for me to raise almost any amount of capital, frankly. Now, of course, I need to make sure that track record stays intact and not get complacent or entitled. But obviously, I do not have a need to raise capital. And in fact, in most cases, I don't really need, even for, say, like Boring Company or Neuralink, I could just fund it myself entirely. But I think it is good to have other investors.
Why even bother with outside shareholders at all? It would be simpler you could take whatever risk you want without having to answer it to anybody.
Well, I do take a lot of risks either way. I don't know. I think it's good to have. I think it's good to have other investors. I think that each investor you add is an ally. It's good to have more allies. I think it also establishes that I'm not delusional in the valuation of the companies. So if others are prepared to invest at a particular value, then I'm not the sole decider of what the value of the company is. Others are deciding what the value of the companies are. It's sort of an assessment of the value of the company. And there is also a need to provide liquidity to people at the company. So I believe in providing stock to the people at the company, the employees and creators of the company. It's important to provide them stock to have the incentive be aligned with the company outcome. And then they at various points want to gain liquidity, so that you want to then establish an outside valuation, and so it's not just me deciding it, and enable liquidity for those who've been awarded stock and options at the companies. And it's generally been my approach to award everyone at the company stock. At Tesla, we awarded everyone stock, no matter how junior they were. So that actually obviously made a lot of people millionaires. I think Tesla may have created more employee millionaires than any company in history.
Yeah.
So I would say, like, if there's a company that's created more employee millionaires than Tesla, there's one or two others, but really Tesla's around 140,000 people, and I think we might be number one. So.
I think you are. So
Cathie Wood recently bought Tesla shares for the first time in 8 months, and lots of investors are talking about it. Tesla has been one of the most popular and controversial stocks in the market. The stock has soared significantly this year, even though it has struggled to maintain its momentum amid regulatory challenges and increased competition. Cathie Wood is a big supporter of Tesla and is known for her bold and visionary bets on disruptive technologies. Her recent purchase of Tesla shares shows that the Tesla bull has not given up on the car company and still expects a higher Tesla stock price in the future. So why did Cathie Wood buy Tesla shares now? And what is her long-term outlook for the company? Let's find out.
Me back to early 2019, we were at Fremont doing a podcast with you when,
Oh, yes.
remember when Tesla was in production hell with the Model 3, and I think you were sleeping under your desk at that time. And you gave us a lot of time to really help us understand this story and what was going to happen, and the rest is history. So just wanted to recount that. Elon, you're so often, the media is focused on controversy, and that's how they get their clicks and hits and all of that stuff. But
yeah, I think they sort of actually don't really have much of a choice, in that any media that isn't focused on controversy and is not maximizing the clicks is going to get outcompeted by media that does maximize the clicks. So you also can't entirely blame them in that they're trying to survive in what is clearly a declining legacy media market. And
yes,
it's a shrinking pie, and shrinking pie, desperate times lead to desperate measures, and that's somewhat frankly predictable.
Yes, yes. Well, that's not what we're about at ARC. We're all about the future, trying to figure out the way the world's going to work. And well, I'd love to give you an opportunity right now to address what you think mainstream media does not understand, because there's such a big story here. There are so many big stories that offer all kinds of hope and really transformation in the future, and you're leading the charge. So what don't they get, do you think?
Well, I think that's quite a long list of things that don't understand, or where they simply don't wish to focus on, because it doesn't quite lead to clicks and traffic, whatnot. I could go over at a high level what SpaceX and Tesla are accomplishing or have accomplished this year.
You just said that like media is a dwindling pie and you own a big kind of like media platform franchise. How do you think about the future of X within that context and how it should evolve?
X is actually growing in traffic. So, I mean, again, one doesn't know quite what to believe, but when you look at the traffic numbers, the traditional media is down, but X is up. So I think that's cause for optimism. But of course, the traditional media would never actually write a story about that. And not going to write a story that says, hey, we're losing and X is winning, is a very unlikely headline. In fact, you see the opposite headlines, which are quite misleading, that X, FK, Twitter is dying or dead or whatever. I mean, how many times have we seen that headline? It's getting a little tedious. I mean, you could just repost the same thing every month is what we should be.
Tesla's financial stability has allowed it to invest aggressively in research and development, production facilities, and other growth initiatives, solidifying its position as a market leader. It has also enabled it to expand in several markets. The automaker's reach extends far beyond its headquarters, and its global expansion efforts showcase the company's commitment to capturing international markets. This is why Tesla is expected to completely dominate the industry, and this revolution could be closer than you think. Hello, everyone, and welcome back to Tesla Tomorrow. Cathie Wood, the founder and CEO of ARK Invest, is one of the most influential investors in the tech sector. The stock investor is known for her bullish outlook on Tesla and has repeatedly predicted that Tesla's stock price could go as high as $2,500 by 2027. In the past 8 months, Wood has been selling Tesla shares from her flagship fund, a move that has puzzled some investors who wondered if Wood was losing confidence in Tesla's growth prospects. However, it appears that Cathie Wood was simply taking advantage of Tesla's volatility and trimming its weight in her portfolio to maintain diversification. In December, the stock expert surprised the market by buying Tesla shares for the first time in 8 months. And interestingly, this decision came amid a challenging market environment, even as Tesla faced a possible recall of its vehicles due to potential suspension issues. So why did Cathie Wood buy Tesla shares after months of selling? Let's find out. But before we do, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. There are several possible reasons for Cathie Wood's change of strategy. One is that she saw an opportunity to buy Tesla at a lower price, as the stock had dropped more than 15% from its all-time high of $299.29 in November. And another could be that Cathie Wood was impressed by Tesla's strong performance in China, where it reported a 35% increase in sales in November compared to October. One of Tesla's key strategies in holding a significant portion of the EV market is its diverse and compelling product lineup. From the Model S to the Model Y, each vehicle showcases Tesla's commitment to performance, range, and unparalleled driving experience. The truth is that Tesla's brand has become synonymous with electric vehicles and cutting-edge technology, and the automaker's ability to establish a strong and aspirational brand image has played a crucial role in attracting a loyal and ever-growing customer base. Luckily, despite the recent market constraints, many stock investors and analysts are still hopeful that Tesla will eventually outperform the market. In fact, judging by the automaker's current performance, it's clear that Tesla's journey is far from over.
Very little code, very little actual traditional lines of software. Certainly at the first level, there's very little. It's a remarkably tiny number of lines of code. So it's just these giant weights files and what your hyperparameter numbers are. And it's basically a giant comma-separated value file. I always find it amusing to contemplate that perhaps our digital god will be a CSV file. And then you make a new CSV file that has maybe more weights and the weights are better. And then you pretty much delete the old one. So just the AI is evolving and deleting its prior self constantly.
So we're going to worship a giant Excel file, essentially.
Kind of. I mean, you need a very big, it's a lot of cells, but it's really just a bunch of numbers. And then those numbers they're getting smaller in magnitude too, going from FP16 to FP32 to FP16 to INT16 to INT8. And now it looks like things are trending towards mostly INT4. So they're not particularly large numbers. Yeah.
And back to
I'm not sure if I'm probably not answering the question, but I mean, I think it's true that closed source is not that far, from a time standpoint, not that far ahead of open source. But let's say, and if you assume open source is you have every 6 months, because of the immense rate of improvement of AI, that 6 months is actually a massive amount of time. Or at least the delta in an exponentially improving situation, 6 months will, I think, feel like an eternity. So I think closed will outperform open by a meaningful amount at any given point in time.
And given I was just going to say, given the questions we were talking about before about truth and not truth, and do you think in 10 years' time, AI will have been a net truth improver or detractor from where we are today?
Well, I think it'll be speaking for, at least for Grok, I think it will be a significant truth improver. That is literally our goal, is to be maximum truth seeking, maximally curious, minimizing the error, perceived reality and described reality and actual reality, and always acknowledging the error, not being too confident about it. So I think that there will be a competition for truth, and people will tend towards the one that they think is most accurate. So, and if there's at least one AI that is aiming for maximum accuracy, I think it pushes all of the AIs to aim for maximum accuracy. Just as with the X platform, FK, Twitter, as soon as X pushes for maximum truth and accuracy, it sort of forces the hand of others. The others now also have to do that.
Right. The truth arms race among the CSVs. And is one of our theses, I think, with ARC is that Tesla is one of the most undervalued AI companies there is because of the insane amount of data you've got on all or to feed into autonomous. I don't know if there's any commentary on that, because I think obviously with the rise of these LLM companies, which are by and large working off essentially available data that is not proprietary, the benefits coming to the companies like Tesla that understand how to use the AI benefits, but do have these enormous proprietary data pools, seems like that's going to be the next frontier.
Yeah, I think that's an accurate description. Tesla is one of the leading AI companies in the world, and with respect to real-world AI, it is obviously by far and away the leader. The word large language model, phrase large language model, LLM, is massively overused. But what I do see happening is somewhat of a convergence towards intelligence. Tesla, like really to make full self-driving work, you kind of need baby AGI in the car because you need to understand reality, and reality is messy and complicated. And just as a side effect, the car AI has to be able to read, for example. It has to be able to read arbitrary science as a little side effect of understanding reality in every language. So I think that everything is coming down to different layers of transformers and diffusion, and then how you put together the transformers and the diffusion. That's why I sort of made that somewhat niche AI joke on the X platform. Who do you think will be president in 2032? Transformers or diffusion?
Tesla recognized early on that for electric vehicles to truly take off, a robust charging infrastructure is essential. For this reason, the automaker entered the supercharger network, and this turned out to be a game changer that has eased range anxiety and made long-distance travel in electric vehicles a reality. Similarly, Tesla's FSD technology encompasses advanced driver assistant features and the promise of fully autonomous driving in the future. And its continuous over-the-air updates have demonstrated the company's commitment to refining and expanding these capabilities. This is what sets Tesla apart from other companies, but only a few people realize this. Similarly, Tesla has the ability to anticipate industry trends and adapt to changing consumer preferences, and this has been a driving force behind its market dominance. As we navigate the road ahead, it's evident that Tesla's role in the electric vehicle market is poised to continue its growth trajectory, and the company's commitment to sustainable transportation and technological innovation remains unwavering. So why will Tesla keep thriving? And what will be the major catalyst for its growth? Keep watching to find out. About 6.6 million global EV purchases were recorded in 2021, from 3 million a year earlier. This shows that there is an increased demand for electric vehicles, which may signal a massive shift to clean energy. In the past decades, the demand for electric cars have increased tremendously, and now more than ever, more people are buying and using electric vehicles. Most Tesla bulls even believe that this increase in the use of electric vehicles will have a positive effect on Tesla car sales and demands. In a recent interview with CNBC, CEO of Gerber Kawasaki Wealth and Investment Management, Ross Gerber, said that there is no need to be bearish on the idea of electric vehicles, since this is fast becoming the new trend. The switch to electric cars is happening at a rather fast rate, and a lot of people as well as countries are beginning to see the benefits of using clean energy.
Full stack AI for Tesla's full self-driving reduces the kind of forecast error for you in terms of when the problem will be solved. As in, you famously have said it's a year away for a few years now. Do you think that like actually line of sight, wherever it ends up, you'll have a better like line of sight on when you're going to cross a particular threshold of performance where it can go without human intervention?
Yeah, I mean, the car is already incredibly good at driving itself. So now, especially if you say like, okay, drive in California, which is both generally easy driving because you don't have heavy rain and snow and that kind of thing in most parts of California. And Tesla engineering is primarily in California, so it's going to overfit for solving California. But if you're just driving, say, around Palo Alto, the probability that you'll need an intervention at this point is incredibly low. And in fact, even if you're driving through San Francisco, the probability of an intervention at this point is very low. So we're really just going through a march of nines. Like, how many nines of reliability do you need before somebody does not need to monitor the system?
What's so interesting, GM basically shutting down Cruise. Tasha has done the work on safety, and it seems that Tesla with FSD has an accident once every 3.2 million miles. At Tesla without FSD, 600,000 miles. The average vehicle on the road, I think this is surface streets, 190,000. And Cruise was 40,000. So there really was a safety issue there. Do you worry that it has potentially set back regulators from considering autonomous transportation? Or is this data, given that accidents on the streets have gone up in the last 10 years, fairly dramatically, actually, because of text?
Yeah.
Do you think that regulators are going to look at the data, which, I mean, we've done the research, Tasha's done the research on this, and is pretty compelling.
Our regulator in the U.S. is the enforcement division of NHTSA, for whom I actually have a lot of respect. I think those guys they really have, they're quite, I think, actually, in my experience thus far, have been quite sensible. That doesn't mean that there aren't silly things that happen from time to time, but they've really been quite sensible because they see the actual truth of the accidents, and they see the fact that there are on the order of 40,000 people killed every year in motor vehicle accidents, and so actually they do care about the safety statistics, and they do recognize that there's always going to be some risk with cars. They're well aware of the fact that our cars are much safer than other vehicles. So we really, there've been a few things where maybe we have had some disagreements, but like for example, coming to an absolute full stop at stop streets, even when it's very clear there are no cars anywhere in sight that could possibly cause an impact. No cars, no pedestrians, completely clear. And actually almost no humans stop at stop streets, at stop signs. Almost no humans actually come to a full stop. They may think they came to a full stop, but typically they'll be going at least a few miles an hour. So they said, well, the law does say that you have to stop at a stop street. Well, even though almost no humans do. So that actually created a bit of a challenge for us because we had to select the rare cases from the fleet where humans actually stopped at stop streets, at stop signs, and then actually get our team to stop at stop streets and then overfit the stopping at stop signs in order to get the car to stop at stop signs because it was trying to behave like a sort of good, normal human driver who does not stop at stop signs. So we had a disagreement there on it, but we ultimately have made the car stop at stop signs, even though it's a little annoying. A bit overwhelmingly,
a lot of people are starting to consider electric vehicles, which is a good thing. According to analysts, there is an increase in the demand for EVs at a rate that has never been seen. This is because electric vehicles are proving to be better alternatives to ICE cars in terms of promoting clean energy. Tesla has also been in the EV business for years, and during this time has expanded its markets and increased sales through improved technology and scaling of its revenue. With the current and expected trend in the use of electric vehicles, think of what the future will be like for EV company stocks, especially Tesla. Several analysts are very optimistic about the future of the EV market, particularly because it will be of great benefit to Tesla, which is a leading electric car company and has a wider market compared to other EV makers. The automaker already has a high demand for its electric cars and may even have more with the expected surge in the demand for electric cars. Wall Street analyst Pierre Ferragu once said that Tesla is facing unprecedented demand. The analyst said this after visiting Tesla's Berlin Gigafactory, noting that a lot of people agree that EV demand is way above what was expected a few years ago. The analyst also added that since electric cars have become popular, market shares for Tesla and its competitors may be dictated by their ability to ramp production volumes. And that's not all. Ferragu also believes that if Tesla can successfully meet the rising demands, its stock price can go as high as $530 in the future, and Tesla may be worth $10 trillion by 2030 if it is able to produce 20 million electric vehicles per year by that time. Coupled with the increased demand for Tesla cars, Tesla is also trying to cut costs, especially with its batteries. Even though the automaker has already cut its Model Y battery costs by up to $3,000 by using the large cells, it still intends to cut costs further by using a dry coat process for its 4680 batteries. If at any point in the future Tesla is able to reduce the cost of its batteries, then the automaker will be unstoppable. Cathie Wood's latest purchase of Tesla stock could mean different things. First, it could signal a vote of confidence from one of Tesla's most loyal and influential supporters, who believes that the company has a bright future ahead. It could also inspire other investors to follow Wood's lead and buy Tesla shares, boosting its demand and price. While this purchase does not guarantee that Tesla will achieve Cathie Wood's ambitious price target of $2,000 by 2027, it still supports her bullish claim that Tesla will continue to be a profitable business. What are your thoughts, though? Let us know in the comments section. For more exciting updates about Tesla, go ahead and click on the next video on your screen. We have so much to share with you. See you there.